regulators say in Georgia, hey, this was not a good decision, as happened a lot of times in the 80s and 70s, require a big write off, maybe several $billion. It was catastrophic back in the 80s and 70s. And we saw this over and over again happen to utilities. People were worried about that. AI is going to create all this demand. So we're going to see this upward pressure on prices. So it's going to be golden for many more years to come. And these stocks are going to go higher. There are risks here, right? I mean, right now, gas prices are cheap. So gas fired generation is extremely profitable.
Only a handful of companies with nuclear power or uranium as their primary businesses have actual real earnings, and their stocks have been bid to the sky. That quote is from Roger Conrad, one of the nation's premier energy analysts. And he says the AI driven nuclear renaissance is for real, but as with many new big trends, the stock prices have more than baked in the good news. So let's talk about winners and losers in the nuclear renaissance with Roger and what investors should do. Roger, welcome.
Thank you. Nice to be here.
Roger, you've been a great friend of BBA. Always great to have you on the podcast. Once it's up and running, nuclear energy at least has a reputation for being clean, reliable power, and usually not terribly expensive. I mean, you got to do something with the waste, but generally speaking, it's a good power, and it's great for AI data centers because it's always on, and that's what they need. So, from a 50,000-foot view, it looks like a party in the making for investors. What's the problem here?
Well, I think the big problem, and you just alluded to it when you said once it's up and running, and that's the big problem. There are two new nuclear plants in the U.S. built by Southern Company. They're at the Vogtle site in Georgia, um, and they took, I think, twice as long as originally planned to build, and cost about twice as much. They are both up and running. From all indications, very well. The company seems pretty happy with it, and they're generating, of course, no carbon electricity, which helps the company at a very steady cost. So now Southern Company is able to do things like wind down its debt that it had taken on to build these things. But it was a dicey process. If you'd been following that stock, a lot of uncertainty, and particularly what would happen at the end of the road. Would the regulators say in Georgia, hey, this was not a good decision? And, as happened a lot of times in the 80s and 70s, and require a big write off, maybe several $billion. It was catastrophic back in the 80s and 70s. And we saw this over and over again, happen to utilities. So people were worried about that. As it turned out, Georgia was very supportive of the whole process. Southern also had the benefit of, I think, a lot of financial support from particularly the federal government, some low cost loans, and they were able to lock in prices at pretty low or financing at pretty low rates. So even though they had things like Westinghouse declare bankruptcy and the cost of this thing really explode, they were able to get it done. Now, the utility right next door, Scana Corporation, which is now owned by Dominion Energy, partly because it took such a bath. They had two reactors, the same design that they were building, and they eventually canceled the project. Their partners, the state, all across the board pulled out support. So these are fresh memories. I would say that what happened 30 years ago with the last generation was also a fresh memory, and that's true as well. Um, and I think that does make things a little bit interesting, I guess, if or too interesting if you're thinking about building a plant. Now, the SMRs, the small modular reactors, a lot of people have been talking about that, and it's exciting. Basically, you build a smaller version. So the idea being that, hey, smaller, it'll be easier to build, less materials, less labor, quicker. We can control the costs and so on. I mean, the problem is there's no design that has really made that case clear to commercial interests to really make it viable. So Westinghouse actually is the builder of the AP 1000. They have the AP 300, which is an SMR. It is a workable design, but again, I think the case has not really been made for building new uh, reactors that a company can, make a plan because you got to site permit, fund, get the materials in place, build, and so on, and do all that within first of all, an abbreviated period of time, not a decade. That's way too long. No one's going to take that kind of risk. But bring it down to 3 or 4 or 5 years. That's still not going to get you competitive with, say, solar, which you can build big facilities in less than a year, or natural gas. It takes a little bit longer than that. But you'll at least be able to provide some sort of guidance in terms of what this is going to cost. And I think once you do that, then we will see more commitment. And there's certainly, a lot of companies a lot of utilities that have built and operate many nuclear power plants. Constellation's the biggest, but there are a lot of regulated utilities like Duke Energy, Dominion Energy, Southern Company that own and operate lots of reactors, and they would like to build more. They believe they can do these projects, but again, you got to get that cost certitude, or you're never going to get these things funded, or regulators are certainly not going to approve them. And even say if you got a big tech company to sign a big contract with you, you really don't have that surety that this wouldn't be a ruinous proposition. In other words, you know how much money you'll make if you get this thing running, but say it blows the budget by enough, you know, no one wants to take that kind of risk right now. So I think you're at a point where you're going to need, some more years, I guess, before this happens. There are also some other conditionals. You're going to have support from outside the corporate world. From, say, the Inflation Reduction Act. A lot of people just associate that with wind and solar and batteries and EVs and so forth. But it also has, probably the most critical support it provides is for nuclear power, for currently operating nuclear plants, to make them profitable to run, versus gas or some of the alternatives. And also tax credits and so on for supporting research. In other words, taking some of the bite out of those costs. So um, I think that if you see all that support continue, and there are signs that it will continue if they don't get into the trap of, say, repealing IRA in total, Inflation Reduction Act in total, without replacing it. Um, I don't think I think the political will is not to do that. I don't think anyone wants to do that, but it's certainly a risk that nuclear has at this point. So I don't see any of that risk baked into the prices of these companies. And we've had some pretty good fortune with them this year. A company that recommended, called Vistra Energy, which I also own.
One of the best performing in the S&P, right?
Oh, it's fantastic. It's about 350% up
I
this
can't beat
year,
that.
which is amazing, right? Because the stock for many years just sat around, at a low 20s price. And now it's, of course, well over, three figures. That they've just had a big run. And I think the risks are basically not baked in there.
And let me ask about that in a second. So one of the stories I tell when I'm talking about investing to people is the U.S. has seen 2,400 car companies come and go. Now we've got like, three or four. We had 900 e-commerce companies in the 1990s. Now we got Amazon and eBay as a spec, right? There's this trend that everybody starts a company and it shrinks to a small number of survivors. In a way,
Right.
it's almost like the opposite problems, kind of, sort of, with nuclear. Like, the public is excited in a similar manner, but it's just much, much harder to bring something to market than the typical investor expects. Is that right? Meaning, like, the people are oversimplifying it, but the reality of operationally getting these plants up and running, even the SMRs, which I was going to ask about, and you answered already.
Yeah.
It's because the Vodal, the Southern Company plant, is a traditional style. It sounds like even the new style is just not there yet, and so there's reality and what we expect, and there's a gap.
Yeah, absolutely. I mean, I think one reason that makes me more bullish on this trend is the fact that it is happening overseas. China obviously has a different regulatory environment. NIMBY, or not in my backyard, doesn't hold as much water over there, obviously,
Any
obviously.
hold any water,
Yeah,
yeah. Yeah,
right.
yeah.
So, they're able to get these, the other side of that is they're able to get a lot of things done very
Yeah.
much faster than is possible here. It's very hard to build things here. That's one reason a lot of people support, energy permitting reform. Didn't make it through this last time. Maybe it will this time. But it does. The bottom line is it just takes a long time, to build something here. And I don't, and with something like a nuclear power plant, it's a very complicated machine. And we do have a lot of tools now that we didn't have 30 years ago. Artificial intelligence being one, I think that will come more into play. You can just do so much more with the data collect. Data science has become so much more advanced, and just data collection. So we do have a lot of tools now that could make this process happen a lot faster. Um, but we don't have any. There's no commercial orders for either SMRs
Hmm.
or for standard scale, large scale nuclear facilities right now. Again, just because we don't know what these things are going to cost. We're just not there in the process, and I think you know, if the support does continue, I think there's a lot of reasons to expect that it will. One, because, when we talk about this artificial intelligence build out, it's real. I mean, you see it in the numbers of utility companies and the capital spending budgets and so forth. I mean, it's happening in real time. But what's getting built to meet this demand is basically a combination of solar plus storage and natural gas, which you need to back up the plant. So that's what you can get done faster. That's the most proven thing, and it's a huge opportunity. But at some point, probably you're going to want to replace some of that, particularly on the gas side, just given the fact, typical fossil fuel economics, right? I mean, we have a lot of shale gas in the ground, but again, we're talking about some pretty big numbers here. So I do think that's a pretty good support for building these things eventually. But to your point, it's just going to take a while. So it's a game for patient investors, not for, and particularly at this point, not for people. I mean, I look at some of the stocks that are in, some of the ETF, because most people are going to bet on this through ETFs, right? That's what we do. Um, and you look at some of the stocks in there, and also to your point, where there just weren't that many ways to invest in nuclear power. There are just not that many stocks. So if you look down the list of what some of these ETFs have in them, there's maybe, out of, 30, 40 companies, there may be half a dozen that are consistently profitable. So
Hmm. Hmm.
yeah, it's a different story than if you're saying buying a natural gas stock ETF or
Yeah,
some other
it's a lot
sector.
more speculative than people probably realize. And let me
Yeah.
let me double click on the IPP point because Enrique Abeta of HX Research is also a frequent guest on this podcast. He loves Talon Energy and he is very bullish on IPPs in the near term. And I'm probably butchering his point slightly. He's kind
Hmm.
of neutral in the medium term, and he's actually a little bearish in the long run. I think
Hmm.
he's bullish in the sense that it's just been a momentum play. We
Hmm.
had an issue with Talon and this Amazon facility and a FERC ruling because the IPPs are technically selling power to captive customers. And by the way, these tech companies are stumbling over each other to lock up this existing IPP nuclear power, right? They love it. They love it.
Right.
They're paying very high prices, but there's only so much of it. But the FERC ruling did not. It was bad news for like 15 minutes in Talon stock price. Then the market just
Yeah.
just
Right.
ignored that.
That's right.
Do you agree with Enrique that IPPs are good in the short run, but maybe in the long run not as hot as they seem?
Yeah, I think from these prices, you can definitely make that as a point. I do think companies like Constellation, um, they have just taken the scale economics of owning a whole bunch of nuclear plants. It was used to be part of Exelon,
Mm-hmm.
and when we had deregulation in the '90s in about 16 states, they just went and bought all these nuclear plants for pennies on the dollar, and they've been able to increase operating rates from the mid 60s, sometimes in the 50% range, to 90% routinely, 90, 95%, just phenomenal increases in utilization. And they brought the cost and duration of outages down, tremendously. So there are a lot of good reasons to like them longer term. They're going to reopen some of these nuclear plants as well. That appears to be in the works at 3 Mile Island. Um, And perhaps we'll see that happen at several of the others that were shut down after Fukushima, and shale gas really brought the price of power down and made them uneconomic to run. So you've got those growth opportunities baked in there, but I mean, does it make sense for the stock to trade where it does? 200s and plus. I mean, it's been carried up by momentum, and the history of momentum is that eventually, if that's all there is, it reverts to the
Yeah,
mean.
yeah. What goes up comes down. Yeah.
Yeah, I mean, reversion to the mean is probably the most sure stock market trend that you can count on. So yeah, I totally agree with his point.
These IPPs, once upon a time, used to be a wholesale power game, and then they since got into the retail business as well. They do
Hmm.
need grid connectivity because there's downtime, and they've got these diesel generators that can partially back up their power, but I'm guessing it's not enough. I'm not an expert on this stuff, right? So they do need some backup power, and there's debate about how much they owe, the grid for that backup
Right.
power. Are those the main risks? Like for someone new to this space, what do you think the market misses about the IPP risk?
Well, I mean, I think you're right that I don't think people really are appreciating the role of momentum is one thing. So that's just a technical
Hmm.
factor. But as far as like a business factor goes, Warren Buffett said, I remember 30 years ago, or 20 years ago, I guess, with deregulation, and a lot of people were really bidding up the IPPs. That was red hot time. We deregulated the states. Suddenly, these power plants are for sale. There's competition, and it was supposed to be this like brave new era that we were going through, and everybody was building subsidiary IPP subsidiaries and so forth. Well, what happened was a lot of them built to gas, and thinking that was always. And I remember sitting in on a S&P credit. These were credit raters conference, and he was saying, well, he was giving me this. They were talking about this. Their theory was there was going to be all these stranded costs, and these utilities were going to take these massive regulated utilities take massive losses because their coal and gas and nuclear plants would be virtually worthless. And all these gas plants would be coming in. My question to him was like, well, gas is at like $1 per million BTU right now. What happens if they go to $5 per
Uh-huh.
million BTU, which we had seen like 10, 20 years.
Yeah.
And his answer was, well, we don't make commodity price forecasts. So, I mean, that's a risk for IPPs is that,
Yeah.
costs, because they have input costs. They're kind of like refiners in a sense, right? Their profitability depends on inputs and then versus output, which is whatever electricity is being sold for. We just had a tremendous spike in the PJM, Pennsylvania, Jersey, Maryland power hub going forward for electricity. That was huge for these IPPs. That's one reason why. I mean, that was one reason the buying trend got going. Now everybody's talking about, well, AI is going to create all this demand, so we're going to see this upward pressure on prices. So it's going to be golden for many more years to come, and these stocks are going to go higher. I think that is kind of a, if you look at what some of the analysts are saying. But there are, of course, there are risks here, right? I mean, right now, gas prices are cheap, so gas-fired generation is extremely profitable. Nuclear power, you do have all these subsidies in place from the IRA, also on the state level in some cases. But IRA is huge, hundreds of millions of dollars for some of these companies. And then you also have, I think, eventually, and you're starting to see it, some pushback from particularly from the grid operators, from regulators, from the states, from the distribution companies, because in a lot of these states, in the PJM, the regulated utilities are just doing T&D, transmission distribution. It's regulated, very steady rate of return. It's a great business, and they're making a lot of money. But they are basically, the consumer is buying power from the IPPs, and they're paying a lot more for it than they were, a year or two ago, and they're going to pay a lot more for a couple of years. So what happens there? I think there's an eventual limit. I mean, I mentioned Warren Buffett's, and I didn't say the quote, but he was like, electric power should be a good business, but not a great business. Meaning that you can only push prices so high so fast. I do think it can be a great business in that we have seen some differentiation in terms of where electrons come from. So companies that can provide them with less carbon, they can provide them more reliably. Um, their power is worth more than what doesn't. But at the end of the day, there's only so much that there's pushback when rates go high enough. And I think there is possibility, and we're already seeing it for T&D utilities to start building their own generation. So that's something that states have, you know, that since deregulation, they haven't been allowed to do that, but they are well capitalized. They know where generation is needed, and they could be allowed, if they're allowed to build it. Pennsylvania might be the first state where it happens, but if they're allowed to build it, that's going to change the market. That's going to create more supply, and that's going to, all else being equal, bring down prices. So I think that's kind of a long-winded answer, but I think there is risk to the upside price scenario, and there's risk to the downside, or risk to the input price scenario as well, squeezing margins.
Do you think people, meaning regulators mostly, will get angry at these big, rich tech companies that have the capital to go in and lock up the cheap generation, sucking up the cheap generation for themselves for their AI data centers, as opposed to letting it go to ratepayers?
I think it's already happening. I mean, I think what you're seeing in a lot of states is regulators, and the utilities are in the middle, so it's a risk to them probably more than anybody else. But um, they are, they're and so we are seeing, yeah, some pushback. It's becoming to the regulators' attention. American Electric Power reached a settlement agreement in Indiana. That could be a template for what you see happening. But there is definitely an awareness, I guess, particularly on the utility side, that there's only so much that will be allowed to happen. I don't know if the majority on the FERC is going to change to the party of the president. So it's going to go from a 3-2 Democrat to 3-2 Republican majority. And it was the Democrat majority that created this ruling that said no talent energy, you can't lock down a certain percentage of the Susquehanna uh, generation to Microsoft or whoever, Amazon
Amazon,
rather.
Amazon, yeah, yep, yep.
But uh, you know they may turn that over, but I think it could be progressively harder and harder to do that the higher prices go. They might be cautioned from making a move like that, because once that does happen, then I think you will see a lot of that nuclear generation locked up, and there will be an impact on pricing.
Yeah, they got the
So,
money too.
yeah,
A
they do.
theoretical question, and then I want to switch to Mag 7 and we start to wrap up. The theoretical question is this, and this would absolutely not happen anytime soon, probably never happen, but FERC, for instance, regulates power that crosses state lines. I think it applies to every state except ERCOT, to Texas, which is like its own little fiefdom. Would it make sense? Like, what about a world in which the U.S. had just complete federal power regulation? Would it be a better world or not?
Well, I actually believe it would not be. I know that's maybe a minority opinion, or at least it's pretty highly discussed. I mean, if you look at on the left and the right, there are, and particularly, people that want to see a lot more renewable energy going from place to place and
Mhm.
so on. They want to see regulatory barriers broken down and so forth, and that's been blamed for uh, a lot of things. I think too many things, but I actually really do like the federalized system that we have for electricity. I mean, if you look at countries like Germany, for example, political party comes in, we're going to shut down all the nuclear power plants, and now we see
Yeah,
what's
totally stupid
what's
move.
happened
Yeah,
there.
yeah,
I mean, it doesn't it. You can be definitely more resolute if you want to go one way or the other policy wise. You can do a lot more. You can do it faster. But is that necessarily a good thing in an industry where the best investment decisions are the ones made over 3 to 5 year period? So I'm actually, we also went through the deregulation period, and I
yeah.
think that's provides a great experience for companies on both sides of the line to see what works and what doesn't. I mean, every state does something differently that I can see, and sometimes the outcomes are really kind of mind-boggling if you're just looking at things from 3,000 feet up. Florida, for example, is probably the leading state for solar power adoption. Makes sense because of the sun, right? But you do have it's pretty much a red state.
Yep.
They've never had any kind of renewable energy mandates such as you see in many states, 3 dozen states or so, but they've been the most successful deploying it. Um, so I mean, there are lots of reasons for that, but I really do think that we get better outcomes in the U.S. from having those types of decisions made by state regulators, utilities on the ground in those areas. I mean, we could do better with things like permitting reform, for example. I think that would take a lot of
Yeah, too
costs
much
out.
NIMBYism, but you're right.
Yeah,
In Florida, we didn't need a heavy hand. It happened organically with the solar.
yeah,
Yeah. So totally different question, Roger. And I read your recent email, and I kind of felt almost a man crush when you mentioned not investing based on politics because uh, it's just it's very hard to guess forthcoming policies, and that's something I've always said to my readers as well. Right? When you bet on politics, you're betting
right.
on the decisions of a few human beings quite often, and that's very mercurial. And odds are someone else has already bet on that well before you come around to betting
That's
on it, and
definitely
it's
one.
just
Yes. Yeah.
not a good thing to bet on. Uh,
Yeah.
so, okay, that's just some random praise here. But then you
Right.
switched
Thanks.
to talking about the Magnificent Seven, which have been over the past couple of years really doing most of the rowing or large, disproportionately large share of the rowing in the U.S. market. Nvidia, Apple, Amazon, those guys. Aswat the Mortar, finance professor at New York University. I met him maybe 20 years ago. Great guy. Puts all of his stuff on the internet for free for anybody to learn from. He says, and I was surprised, he says the Mag 7 have more room to run. It sounds like you're more cautious, and you extend your point to an ETF. You're traditionally, people say just go in and buy an all market ETF. You can't go too wrong. Over time, there's a small number of active managers that actually beat the market anyway. So just buy a cheap Vanguard ETF. Can you explain your view these days on that?
Yeah. Well, I think number one, we just have a lot of stocks. A very small number of stocks. They're about a third of the index, so that's pretty massive. That's pretty massive concentration. So when you buy one of these ETFs, and that's the other part of it is pretty much everybody owns that basket of stocks. There's more money passively invested in the stock market now than there is actively managed. So fewer decision makers than ever.
Yeah.
But
Which is
where's that?
society a little bit dangerous if it goes too far. It can be dangerous, I would say.
Yeah, I think I don't think these companies are going out of business anytime soon. I think they are
Almost the
probably as
opposite, right? They're
strong.
making too much money. Yeah.
Yeah, they're as strong. I mean, I think they've kind of graduated to the point where they're like the super oil majors.
Yeah. Yeah.
They're stronger than most of the world's sovereign governments at this point, and that's pretty extraordinary. And they're latched into the reason for that is they're the ones driving where the economy's going. They're driving so much of what we're doing. But I do think that was also true of the leaders back in 2000, 1999, 2000. In fact, many of those companies, some of those companies are the same companies that you see right now, but they ran a really long way. They got bid up, and people started confusing the health of their business with the health of their stock. Now, I very much counsel people to focus on underlying businesses of companies, but I'm also looking at a group that, utilities, energy, and pretty much any other stock out there that their stocks are not anywhere close to where, the big seven are. And in fact, they're in sectors, pretty much every other sector is way underrepresented in the historically underrepresented in the S&P 500. So I guess what this all adds up to is most of the money in the country is passively invested, and it's all in basically in these same stocks through whatever vehicle. If you're in a target fund, which so many people are, if your money is in which that's the way pensions work, right? I mean, most people that are in pensions and they're going to retire at this point, they've got them in this sort of, stocks, bonds kind of thing. And the stocks are, they're not going to be going out there picking them. They're they're these big stocks. And in fact, the bigger funds get, the more money is pooled together, when you get to Vanguard size, where you're talking, what 11 trillion they have now. That figure's probably behind. Um, how can you invest that money in any way effectively? Well, there's only so many. The more money you have, the fewer stocks you can buy. I don't think a lot of people realize that, but $1 trillion fund literally can't invest in a fund with say 5 billion market cap. It's got to be something that it can buy a meaningful quantity of and get out of without moving the whole market on their own. So that's how we've gotten to this point, and we're just at a. It's I'm not sure we've ever been at this point. Maybe 100 years ago, when Wall Street was kind of a different animal than it is now. But tremendous market concentration in a very few names that have been bid up a lot. I mean, they're pretty expensive relative to business. So I think that's uh, kind of a dangerous place to be. It's made me a little more cautious about the overall market, about the economy as well, because if we do have a big enough crash, a lot of people are going to suddenly see their wealth shrink when their statements come, or they're probably looking at them online, and there's a wealth effect that happens. So even with the kind of stocks I talk about, I'm keeping a decent amount of advising people keep a decent amount of cash, be more cautious about coming in and coming out and so forth. But that's kind of how I see things right now.
Yeah, makes sense. And traditionally, the equal weight S&P 500 has outperformed the cap weighted, but that has absolutely not been the case for the
Right.
past several years because of the Mag 7.
Yeah.
Would you be a buyer of the equal weight right now?
I am a fan of buying individual stocks. I would definitely be more a fan of the equal weight than the cap weight at this
Got it.
point, just because of where we've been and because, yeah, I think there are a lot of companies out there that are in good shape, and are cheaply valued and are just not, uh, you know, they're under owned. I mean, that's even true of energy, and we've seen this is another reason I think energy is just the energy indexes. They've outperformed the S&P 500. They've outperformed Nasdaq. Big tech stocks and so forth. Maybe not Nvidia, but um, over the last since the last 4 years and the last year as well, they're still very underowned in terms of the percentage of the overall cap weighted
Yep.
S&P. So.
So
Um,
your point is it's a stock picker's market. Whether you're looking at the S&P, you don't want to own all of them, at least in a cap weighted sense, or the energy, or especially the nuclear industry. You got a few good ones that are actually making real cash. Even they might be a little pricey, but you got a whole bunch of speculative names. So now's the time not to buy an ETF. Now's the time to pick individual stocks. It
yeah,
sounds like you're saying.
I totally agree with that. I think, yes, I do. I say
So,
that a
so
lot. Yeah.
So great. So somebody's listening,
Yeah.
Roger. Say, all right, this sounds good. I like what Roger Conrad is saying. He seems to know his stuff. I resonate with his vibe. And that audience member wants to learn more about you. Where would you send them on the internet to go?
Well, I mean, you can go to our sites and we have, products on their sites at Capitalist Times. Conrad's Utility Investor
Hmm.
is. I also have a Substack column, and we have both a free product, and that's a column I send out every week, and a paid product. And that's just Dividends with Roger Conrad. Or you can go to the Substack app. You can search my name, Roger Conrad, and sign up. And you can see what, for a free trial of what you can see the kind of things I write about. You've mentioned some of the things that I've written about recently in those columns, and then if you like what you see we do have paid products there as well, and like I said, paid products at Capitalist Times. So there's any level of involvement if you like what we do.
Substack, Capitalist Times, Conrad's Utility Investor. We'll put those URLs on the screen, and I'll put some links in the show notes as well for people who might be interested.
Thank you.
Roger, it is always a pleasure to talk to you. Just you have encyclopedias of knowledge about the energy space, and I learn something every single time. And I'm sure many of those watching did as well. So thanks to you, Roger, for your time, and thanks to you guys, as always, for watching us at home.
Thank you.